To Ukraine. Joining me right now is Macro Intelligence 2 Partners co-founder and president Julian Brigden. Julian, great to have you this morning. Thanks very much. How do you assess the situation on the ground today, Russia invading Ukraine?
Well, I mean, it's obviously a very tragic event, absolutely tragic, Maria. But I think for markets, you know, when I've been on the show before, back in October, we were talking, but a couple of months ago, we were talking about how the vulnerability of the market exists, just from a technical perspective, how far the US equity market is run. And I was very, very cautious of suggesting people raise a little bit of cash and tighten up their risk profile. And this, I think, has just come along and hit the market at an extraordinarily vulnerable time. But I hate to say, if it weren't for this, I think it would probably be the Fed. Yeah, I mean, this is from a macro perspective, it doesn't really matter what the trigger is, as tragic as this Ukrainian invasion is.
Well, Julian, what do you make of that epic comeback? What do you make of that epic comeback yesterday, though? Because the NASDAQ was down 3.5%. And at some point, investors obviously saw value, and the NASDAQ had been down 16% from its highs. And at some point, they said, well, it's too much, turned the whole thing around. NASDAQ actually finished up 3 1/3%. And the question yesterday was, is this invasion of Ukraine going to change the Federal Reserve's moves? Is the Fed still on track to raise interest rates? The central bank now expected to raise rates 5 times. And the idea that we were going to see a larger 50 basis point hike is now off the table. Analysts are expecting a 1/4 point at the March meeting rather than that 1/2 point as a result of what we're seeing in Ukraine.
Yeah, absolutely. You're absolutely right. So, look, I mean, it was an epic rebound yesterday. I mean, extraordinary reversal that we saw. Yeah. But I think there are some technical factors behind that, one of which was that we've been trading very poorly for the last few weeks, months, and there was an awful lot of puts that people owned, protection on the downside. And my understanding is an awful lot of those were sold yesterday as the market started to gap down. And the net effect of that is to force, actually, in a bizarre way, buying into the market. So I think what we really got yesterday was probably a bear market squeeze. So a classic sort of aggressive rebound within the process of the market actually rolling over and making a bigger top. So I'd love to say that it was the all clear. I really don't think it was.
So Julian, are you on the sidelines right now, or are you a seller?
No, I think, you know, I'm not an aggressive seller here, Maria. We've been advising our clients actually on some big levels and things that we don't like. It's one of those things that I think we're paying the price for the really excessive stimulus that was done last year and just ramping up these markets to ridiculously high levels. And I think we have to have some sort of payback here. And yesterday, you know, the day to buy is not necessarily a day like yesterday. I'm really looking for a further washout, I'll be honest with you.
Exactly. Julian, it's good to see you this morning. Thanks very much. Julian Brigden joining us this morning on Markets in the face of all of this.